Hello everyone, my name is Toon, the Chief Investment Officer of Asia Pacific Equities at RHB Asset Management. Welcome to another episode of our podcast. 23rd July marks the 6-month anniversary of the start of the lockdown in Wuhan, the initial epicenter of the COVID-19 virus. A lot has happened in the world since then. Yet, the equity markets are back up to the same levels we saw earlier in the year. In today's episode, let us recap what's driving the market at this point in time to help us better understand what is going on. For those of our listeners who have followed my earlier podcast, should know that we have been advocating investors to stay investors in April 2020 despite the volatile markets at that point in time. In my April and May podcasts, we also urge our listeners to look towards China and the technology sector to play the recovery and the new normal post-COVID-19. Since then, China and the Asia technology sector have done very well. From the March lows, China is up 25%, while Asia technology sector is up 33%. Year to date, China is up 10% in absolute terms, while Asia technology sector is up 8%. Let's now explore the key reasons why the equity markets have rebounded so strongly after the sharp crash in March 2020. A key driver of the equity markets have been the unprecedented amount of liquidity unleashed by the central banks of the world over the last few months. From this chart, you can clearly see the relative magnitude of the quantitative easing compared to the global financial crisis in 2009. In addition, the fiscal stimulus measures implemented by governments all over the world are also unprecedented in speed and in scale. The actions of central banks and governments have certainly pulled the stock markets from the death spiral we saw in March to the heady heights we are seeing now. We will be closely watching to see if and when the punch bowl of QE and fiscal stimulus will be withdrawn. Furthermore, the good news on the developments of vaccines have also cheered the markets. Currently, there are more than 140 vaccines in preclinical trials. 21 vaccines are in phase 1 and phase 2 clinical trials, and 4 in phase 3. There's even one vaccine approved to be used in China. We believe that we will continue to hear further good news on the vaccine front over the next few quarters. In addition, the world has slowly started to emerge from our self-imposed lockdown over the last few months. This has brought about much needed relief to the economies and the stock markets as we tentatively go back to school, to work, and to play. Unfortunately, as the world slowly reopens, we are also starting to see evidence of second waves of infection in Japan, Australia, and Hong Kong. These are certainly worrisome signs, as these areas might be forced into another round of lockdowns, which will affect their still fragile recoveries. On the political front, we will continue to monitor the US presidential elections in November with keen interest. Donald Trump is now lagging behind Joe Biden in the polls. It is likely that Trump might once again invoke or even provoke China and other countries to distract US voters from their domestic problems. This might create further volatility in the markets. Next, we would also like to highlight to our listeners the valuations of the major equity markets as the stock markets continue to make new highs. Unlike the bargain basement valuations that we saw in March and April, we think that the markets may now need some time to digest the gains after the strong surge in the equity markets over the last few months. In particular, we would like to point out that the US stock market is trading at near all-time highs compared to Asia. In April, we urge our listeners to stick with key structural themes like China and technology sector, which will play out over the medium to long term. Even now, we continue to believe that this is the right approach for our clients. Short-term market timing is notoriously difficult, even for professional investors who do this day in, day out. A proper investment strategy is never about a short-term punt in the market. A key advantage that a patient investor has over other short-term investors is that the patient investors can focus on the longer term and not be swayed by the short-term price movements. This is known as time arbitrage in investment jargon. In our opinion, this is probably the best way to invest. In the midst of the COVID-19 pandemic, as the equity markets ebbs and flows, remember, these too shall pass. With that, we have come to the end of our podcast. Stay strong, stay safe, and stay invested. Thank you very much for your time.